Hello, this is John Piper with the weekend video clip, and it's Saturday the 7th of November. I thought I'd start with euro dollar today. We have further downside here, and you can see the initial 5-wave decline, the ABC rally, discussed that endlessly. Initial 5 waves down here. I told you I took some profits around this level, left a bit in position. We then rallied, but we haven't seen the ABC I was expecting. Instead, we've just gone straight down with more news yesterday, which seems to confirm the view that interest rates will rise in the US and that things aren't as bad as everybody, including myself, thought. Whether that's the case remains to be seen, but interest rates going up aren't necessarily a good thing for stock markets. It may be that the economy is better than they thought, and that obviously is a good thing. But it does show, certainly on the equities, that there's a bull market perception at the moment. So I encourages a view that we're going to see upside, but I still think that January is going to like to be a turning point. Right now, this could continue. I mean, I did buy some, I did convert some sterling into euros yesterday. The rates are particularly attractive. As I live in Spain, it's quite useful to have some euros around, you might imagine. But no sign of a low at this point. Having seen what we've seen, I wouldn't be at all surprised to see it just continue, but you do get to a point with currencies where it becomes a bit disruptive. You see various moves that are just too much, and already this one has gone a long way already, so it's not like it's in its infancy. I'd look at the weekly chart to see that we were up at 1,380 some little while back in 2014, so we've come down 30 odd cents now. Quite a significant move. So whether this can really plough much further remains to be seen. I think parity remains on the card, which of course is another 7 cents. But I think there'll be resistance to go below that because currencies are one of the major factors which can cause some kind of disruption if things get out of kilter, which they do appear to be doing at the moment. This is the daily chart of the DAX. Same pattern, obviously, in a big ABC down to this move here. Since then, it looks like another A, B, C, a B, 1, 2, 3, 4, 5. And we keep getting these little blips up, further waves, which are slightly confusing the pattern. Let's have a look at that in a bit more detail. In fact, they're not achieving a huge amount more, and we got up to here at the end of October. Then we blipped a little bit higher, again at the end of October. Early November, we've seen the other two highs, but they're not dramatically different from the previous levels, so they're certainly a slowing momentum. If you look at the moves here, much more dramatic. So I think it would be healthy to see some kind of pullback from here. We're now at the 11,000 level, although having some trouble seeing acceptance above, though that might change next week. So I think we're liable to see some kind of pullback. Quite how deep, I don't know, and then probably the Xmas rally. And then I think, my view is that we're going to see some kind of peak early in 2016. The Dow was relatively restrained yesterday. We had an ABC down to here. Yesterday the news came in and it didn't really do a huge amount. Then we started blitzing up and down, and ended on a high note, but not hugely high. So again, it may be that we are due some kind of pullback here, but again, given the time of year, I think it's liable to be just a buying opportunity rather than anything more dramatic than that. Similarly with FTSE, we saw this big decline, but the bounce back has been quite feeble comparatively. I mean, I can't recall precisely where the 50% level was, but it's not far adrift from where we are at the moment. Maybe around here, perhaps. So all we have here is a fairly weak ABC move. Again, suggesting we're going to pull back. We're just not seeing very much to encourage that view at the moment. The whole pattern here is corrective from the peak A, B, C. Got these sort of trading ranges. That's again, it could be some kind of triangular formation. So again, a fairly mixed bag with the DAX maybe outperforming a little bit, but we are certainly consolidating. I guess we could go higher, but I think some kind of shake-up would be healthy at this point in time. Right, look at gold now. This is a monthly chart of gold. The peak here was 1920, so 960 is a 50% retracement level from there, which may be some kind of a floor for this move. You'll see there's a very dramatic move up to here, which we caught quite well actually because this triangle doesn't look so triangular here, but it was a pretty good triangle, which was in my book actually, Trading Triangles. So we got that move quite nicely. Since then we got, I think, another triangle here as I remember it, which obviously broke the downside of for that move there, and ever since then we've just been drifting down. It looks like we're going to see new lows. Let's have a look at this in a bit short. But I would have thought that if we see new lows, the 1,000 level down to 960 should be a good place to start buying again. I'll be looking to buy some more gold coins into this move, certainly. So I remain positive on gold in the longer term, but not in the short to medium term. Again, it may be 2016 before things start to change on that. Right, that's all for today. Hope you found that interesting and useful. We'll be back with a report on Tuesday morning. Have a great weekend, and bye for now.